What's up, everyone? I want to talk about MSTY today in retirement. If it's a viable position in retirement, my wife owns some in her little in her play account, I guess you could call it, and we're going to look at what she's done with it towards the end of the video. But I want to talk about why there's so much hate love for this product. We're going to look at numbers, charts, distribution history. We're going to look at some, what analysts have said positive and negative about it. And I don't know. I'd love to know your thoughts on MSTY as a retirement position. So here we go. Okay. So here is Mr. We're going to focus a lot on Mr. and MSTY, but we're going to focus a lot on Mr. as well in this video because that is the underlying. And you can see here since 2021, it's really done nothing but rip. I mean, it had some down period there in 2022, but there's something I want to bring your attention to, okay? You see this green line? There's a white, green, red, and purple. Those are EMAs, and this is on a weekly time frame. That is the green line I want you to focus on here, okay? That is a 50 EMA on a weekly time frame. Each candlestick on this chart represents a week. It has never broken and hold below its 50 EMA since 2024. That can't be said about many, many things like SPY, for instance, went down and touched, and the S&P went down and touched its purple line, the 200 EMA, during this latest crash. And as you can see, MSTR has never, since 2024, hasn't held below its 50 EMA. That's actually rather impressive. And you can see all the EMAs on MSTR are all, gravitating up. That's extremely bullish, and especially on a weekly time frame. Okay, now here's Mr. since MSTY came out. And you can see it consolidated there for a bit, had a couple little spikes early on, but it has rocketed up. Now, look how volatile this thing is, right? It went up to 543, and then it's fallen down to around 250, and has since come up from that. So it's lost, half its value from a drop. Again, this is on a weekly time frame. Each candlestick represents a week. So extremely volatile MSTR is. Here is MSTY, and you can see how volatile it is itself in relation to following Mr. Like usually for a yield max fund, it's a slow decline over time. This thing rockets up to 45, collapses back down to 20, as you see there, and then rocketed back up to 45 again, and then has since went lower down to $17. So MSTY in itself is just as volatile as its underlying. Look, this is the same time period that here's a Mr. chart, and here's a MSTY chart for the same time period. Extremely volatile. So let's get into this. Okay, so let's look here at MSTY since its inception. I mean, total return is 285% if you invested all the dividends back into it. My wife, she doesn't invest the dividends back into it at all. She lumped some two buys into MSTY last August and has never touched it. She just pulls the distributions every month. And so if you've done that since inception, you're up 178%. So if you reinvested everything, you're up 2 times over, almost nearing 3 times over. But that's reinvesting everything, right? And that's in retirement, that's just not feasible. You need to pull some to live off of, right? So if you pulled it all, you're still up 178% in MSTY. That's fantastic. I do not know what else you could say about up to this point about MSTY that is negative, except that it's just killing it. I guess you could say this, right? If you want to compare it to its underlying, and as far as how it's moved, you could look at this as a negative, I reckon. And MSTY again, 285%. And over the same time period, Mr., if you reinvested all the dividends, which Mr. doesn't have any, you're up 435%. And you could see here the gray being MSTY and the blue line there being Mr. How it is capped pretty substantially there. Any kind of major volatile rip up, it gets capped, and you can see that quite evidently here. If you pulled all the dividends in MSTY, you're up 178%, while Mr. is up 435%. Now, normally, I wouldn't care about the underlying. I mean, as far as comparing the covered call fund to its underlying, really, because they're two totally different products. But this is quite a substantial difference, and it can show you the weakness of Yield Max as far as the capped, and you're going to see that probably later on with MSTY. If Mr. goes on another run, that MSTY will be capped quite substantially, and honestly, because we hit this low back here, lowest it's ever been at 17. Even if Mr. gets up there to 543, it's going to have to go higher than 543 for MSTY to reach $46 again, just because it's capped so much and it went lower. So there's that. Okay. Now, how has MSTY performed against, let's say, SPY? And, it's not even close. 285% again if you reinvested all the dividends to 11%. And I don't think anyone's saying SPY is a bad product at all. I think it's one of the better ETFs in the world. That's my opinion, of course. Up to you to make your own opinion. But it has left SPY in the dust. And even if you kept all the dividends on MSTY like my wife is doing, you can see total return 178 versus 11% there. So just absolutely destroying SPY as far as that goes. So let's look at some dividend history here. Now, this is obviously kind of alarming for a long hold, in my opinion, again, for a full-on retirement position. Here's all the dividends that or disbursements, whatever you want to call it, that MSTY has received. But what's fascinating is this dividend chart to me. And it did have a higher high there with that dividend or that disbursement, whatever, right there. But we can see a much lower low there. So you can look at this chart and see that over time, MSTY is decreasing in dividends. And just like any Yield Max products, the dividends in monetary value will decrease over time. You can see that clearly here in this chart. And if you go back and look at here, you can see how the dividends have fallen off. Now, of course, the market has been down, but honestly, MSTY held up well, as did Mr. and Bitcoin. But over time, your dividends are going to decrease over time with a Yield Max product, which for me in retirement is a no-go as a mainstay. It's a tool in my retirement account, but not, meaning a Yield Max product, but not even close to a major holding. Okay. So, the major risk with Mr., and here's a couple drops that it's had here. And, of course, if Mr. drops, MSTY's going to drop. A big notable decline was 89% drop during inflation shock of 2022. So it's happened twice. 62% drop in 2000, 89% drop in 2022. If it's happened twice, if it's happened once, it could happen again. Just something to consider going forward. Okay, the graph below is a courtesy of the Financial Times. It shows Mr. is more volatile than any other S&P 500 stock, and you can see that here it's more than Moderna, right? And you can see here Palantir, Intel, right? It's more volatile than anything else here. And then you can look at the second graph, which shows Mr. has about twice the implied volatility of Bitcoin. If you want to look down here at this particular chart, and you can see that there. So it's obvious that Mr. is extremely volatile and, according to the chart below, more volatile than Bitcoin itself. Now, here's what one analyst said about MicroStrategy. He thinks they're preying on investors. They're pumping up optimism on Bitcoin to drive higher volatility in their stock, since volatility is what drives Mr. and therefore MSTY. A sharp decline in Bitcoin will likely accompany the collapse of MicroStrategy. I mean, it did have these collapses here, an 89.3% drop, but as currently, it hasn't collapsed the company. So I don't know how much of this is somebody that just hates MicroStrategy on its own and wants to throw that in there, but it looks like it would take a pretty significant collapse for that to happen. Now, it is a leveraged Bitcoin play or work or whatever you want to call it. And to me, for my retirement account, that is just way too risky for me personally. But it doesn't matter what I think. It's up to you guys and what matters to you. Now, here's what can go wrong. Like, I always want to know what's like one of the worst realistic possible scenarios that can fall. Like World War III could collapse SPY, and there goes that, right? But if you want to read through this, the potential reward for bondholders is that the price of MicroStrategy is higher than the conversion price. The risk of owning debt are twofold. First, assuming the company doesn't default. Can you imagine if MicroStrategy defaulted? I mean, collapse like that, what it would do to your account, and if you were holding MSTY? Worst case scenario, he calls it the worst case scenario. One considers holding MicroStrategy or Mr. Pay back the $7.2 billion of convertible debt. Woo! It's not with income. How is it going to pay it back? The graph below shows their net income after taxes since 2000 is negative $1.5 billion as a company. The average quarterly loss over the 8 quarters. Oh my goodness! Like, wow. So if micro or Bitcoin collapsed because it's a leverage move on Bitcoin, and MicroStrategy collapsed along with it or went way down, how are they going to pay back this debt? And it's not with their net income as a company. That's wow. That's pretty substantial. I don't know who's watched a video of this long. People love Mr. or MSTY, don't want to see this stuff. But yeah, how are they going to pay it back? Because this is what it is. They're owning debt to buy Bitcoin. Wow. Now let's look at somebody else. Tom Lee. A lot of people love Tom Lee. He's bullish on MSTR. He likes the move that it has, and you can see here he views Mr. as a leverage play on this thesis, and he likes that the fact that on their earnings they're not talking about what their other businesses do inside their company, just about their Bitcoin, and it's more reflective of the Bitcoin valuations. Here's something else that Tom Lee says. If you want to read through this, he believes Mr. Investment in Bitcoin is a leveraged bet on this thesis, meaning the company's performance is closely tied to Bitcoin, which definitely that happens. Mr. Lee sees this as a strategically positioned for the future of finance, especially in a world seeking alternative financial systems. So, yeah, I mean, I guess it depends what you think, who you want to listen to. But for me personally, it's way too risky to hold as a major player in our retirement fund. And you may think differently, and that's fine. It's just for me, it's just too much. Now, just for this is my wife's average cost. It's at she owns MSTY at 26.26. That's her average cost. She's bought twice, lump sum both times, and has never touched it. She pulls the disbursements, dividends, whatever you want to call them, once a month and does whatever she wants with them. Here's the current price of Mr. Eder took these pictures and sent them to me, and or I took them, and there we have that, right? So it's trading at 25.30. That's her average cost. You can see when she bought there, August 26th and August 30th, and there's market by the mug, and has never touched it since. That's it. She just bought two lump sums and lets it go. And so obviously she's positive, right? Because she's owned it since that time, and with the dividends she's received, she's way positive on this fund, and it's not paid for itself yet. I'd have to look at the math. Just eyeballing it, I think she's around 60, 70%, something like that, paid off. If you want to figure it out for us, that's fine. But yeah, so her first dividend would have been, if she bought it, August, it would have been in September. So dividends from September till today, whatever that would be. So just eyeballing, I think it's about 60% paid off, roughly. But yeah, so for her, she loves it because it's just something to make some additional money. It's going to pay for itself over time, obviously. And if it's already 60% there, so for her, it's great because it's just extra additional revenue. And if it goes to hell in a handbasket, who cares at this point for her? Because she's just going to, capture all the disbursements until the wheels fall. She's not putting anything back into it. She doesn't even reinvest back into it. So whatever it does, it does. She doesn't care. And from that aspect, it's been great. And this is what gave me the idea with her, actually, with this, was to just work on return on investment in a yield max fund. Don't use it as a retirement position, but more like a just extra small revenue where if something horrible happened, it's not going to hurt you. And the only benefit is just extra revenue until the thing pays off. And then once it's paid off, it's all profit after that point. So there's that. I hope you enjoyed our take on Mr. and Misty. I'd love to know your thoughts on it. This is Mike, Tactical Stock Scalper, out.